Hi, good afternoon, everyone. This is Ankur Rawat. I'm the director for products and solutions with Newgen software, and we'll be going through one of the sessions for retail lending today. Now, just to confirm, I hope you're all able to hear me properly, and if yes, if somebody can confirm through the questions and answers session, it'll be great. Okay. Okay, so thanks for that confirmation. So we'll get started on this, and my apologies for the technical delays on the session. So what we're going to cover today is specifically from the retail lending journey perspective, how far the overall industry has moved from the technology perspective, okay, and why the philosophy of if it ain't broke, don't fix it does not really apply when it comes to the banking scenario. How the competition is changing right from the commercial banks, community banks, to a completely new paradigm in the organization. And then what is the retail lending roadmap that all the organizations should have, and how to really transform the overall retail lending journey as well as the organization. So we'll discuss all of these topics which are contemporary and relevant for the businesses today. Now, quickly, kind of recapping the entire life cycle or the history of the retail lending. Obviously, with the banking being there for so many years, and there were a lot of efforts of automation. But if we really see the efforts which were effective, really came in right from 1980s to 2000, especially during the fag end of the last century, because of the retail lending being a very high volume, standardized process and a profit center for the banks and credit unions. There was a need for automation. It was the perfect candidate for automation, and the automation was really done for efficiency to reduce the manual hours spent on processing the loans and to expedite the process. Now, once there were tools available within the market for the automation, really with the overall lending boom and the market penetration by a lot of financial institutions adding on the customers and the financial growth, the technology itself did not see a lot of improvement when it comes to retail lending. Okay, so whatever technology was implemented by the institutions, they continued with that for such a long time that it actually became very stable, and I would say institutions became comfortable with that approach. And so far, after 2008 recession, and with a lot of other changes coming from the regulatory perspective, institutions have been trying to cope up with the market competition, but still there are a lot of institutions who are working with the same solution, same technology, leveraging the legacy applications, workarounds, and manual handoffs. Okay, and this is a huge percentage of the institutions, and there are few outsiders, outliers who have actually adopted technology very nicely and went ahead with the curve. Okay. Now it's a very old saying that if it ain't broke, don't fix it. While it might apply to the daily life and some of the other factors, it really is not applicable at all in the retail lending and other parts of the banking. Okay, so as per Charles Darwin theory of evolution, it is not the strongest of the species that survives, nor the most intelligent that survives. It is the one that is most adaptable to change. As much as it applies on the life on Earth, it also applies with the technology. Okay, so if the technology is not able to adapt to the changes, it really will not survive, and neither will the institution utilizing those technologies. And that was really evident with the multiple changes that we have seen in the past decade or so. So with the 2008 recession, there were a lot of regulatory compliances that were required by the institutions, and additional efforts were involved in terms of the additional staffing to ensure that all of those regulations are complied to. Okay, so truth in lending, RESPA, all those compliances required additional staffing and efforts. Okay, similarly, post the recession with the regulatory pressure, there was the rise of alternative lending, wherein the institutions which were declining the loans to some of the borrowers, they were really welcomed by the alternate lenders. And this increased the competition, because while the applicants were able to get the loans easily from alternate lenders, even the customers with a good credit history and the other factors had tendency to move towards the alternate lenders. And then came the fintech. Now we all understand that financial technology companies have been there in the market for a long time, but a few years back, all these fintech companies were kind of enhancing the banking services for various institutions, banks and credit unions. They were supplementing or complementing these services. Now, with the recent changes and the boom in the financial market, we have seen that fintech organizations are now replacing the banking services. They have become the competition for a lot of the banks. Okay, so with all of these changes, it is a high time to take the approach of an adaptable platform and have the digital transformation incorporated within the solution. Now, while it was already a competitive market within the financial institution, we are saying that the competition phase is really changing now. Okay, now from the alternate lenders, from the fintech organizations, we are seeing that big players with a behemoth of the customer base are plunging into the financial market. So we did see a lot of such initiatives. Facebook, trying to launch Libra and Calibra as digital wallet payment methodology, and but again, it was pushed back by the government. But we can assume that if Facebook is trying to eye the financial market, it's a really serious game. Okay, Google has again collaborated with Citibank for the checking accounts. Amazon lending has also lent around 1 billion every year for the last 3 years. Okay, Apple's credit card, which was recently launched, has already extended credit for more than 10 billion so far. So, and again, there are other examples with the other institutions, and the companies who are trying to grab the share, for the financial market. So Uber again is lending, and then Square One. All of these are the companies which are to be looked for. Now, why these institutions or companies could give the banks run for their money is because these institutions or organizations have a great customer experience. Okay, as per the latest study by American Bankers Association, it will be very critical to satisfy the Gen Z now, which controls $45 billion in annual spending. And the oldest Gen Z customers are nearing 24 now, which is the prime age of investing, of opening the accounts, and trying to, again, be there in the financial market. So while there was a talk of millennials in the past century, now this is the age of Gen Z, all the customer base born after 95. So how do we transform? As per Newgen and as per the various best practices that we have seen in the market, this is the road for transformation. Obviously, the ground zero is something where all the institutions started from the paper-based records, physical archival, manual processes, trying to utilize something of an Excel kind of framework for underwriting. So those were the days when everything was manual, and we believe obviously none of the institutions now are at that stage. And then, as we discussed, because of retail lending being a high volume and a high standardized process game, a lot of out of the box solution or off the shelf solutions catered to the automation requirements, and the automation was really done for the productivity efficiency in a nutshell. So this resulted in workflow automation, paperless processing, which means all the documents were digitized, and then the workflow would move along with the documents, and you would get reporting for some of the basic analysis on the process. Now then came the automation for effectiveness, which means that the institutions wanted the process to be perfect and the automation was enhanced in certain areas. So we did see the rise of the online loan applications. Banks wanted to have a digital face for the customers to be able to apply for the loan online. Okay, they had automated underwriting to get the rules incorporated and the system telling the people that, hey, this loan is approved and this loan may have some issues with it. And there was a hint of reporting and analytics, with especially with the BI tools coming into the market. That data is leveraged and analytics are done on that data. Now this is where I would say that most of the institutions have a grip on the effective stage of the retail lending, but the overall progress does not really stop here. We are looking at institutions who have already taken a quantum leap and moved to digital transformation journey. Okay. Now this really moves the overall game from just the online loan application to a great customer experience, to a great employee experience. Okay, so institutions who are just having the online application, which could be an e-form or a downloadable form, it is not something which is applicable in today's market. Customers are expecting a seamless journey for themselves in an online portal in the cross-channel experience. Okay. Similarly, institutions are looking at straight-through processing. There are several institutions that we work with who have already automated the straight-through processing without any manual intervention in the lending platform. It's the age of contextual interactions. Now, based on the real objective or the emotions behind a customer's journey or a request to a bank, the bank should be able to cater to that objective, that emotion, and accordingly present the options or solutions to these customers. Finally, the digital transformation is not possible without adaptability. And again, going back to the theory of evolution, if you are not able to adapt, if you are not able to meet the requirements which may come up in future, which we are not aware of today, then there's no point of having a digital transformation without adaptability. Okay, so there are two questions that every institution should ask. Where do we stand? Okay, so where do you stand as of now in terms of the stages? Are you at effective or transformative stage, or there might be certain institutions still at productive stage? And secondly, how do we achieve the digital transformation? Now, my next few slides provide the answer to the digital transformation. And obviously, this is a very critical question and a large, there might be several answers to that, but this is how, Newgen responds to the digital transformation. Now, when it comes to the customer experience, having a great customer experience, which is in no way less than the experience the giants like Amazon, Apple, Facebook provide to the customers, is the key for the future success. Okay, so we're looking at omni-channel, cross-channel, device responsive interfaces, for the customers when they apply for the loan. We are talking about reducing the friction at any point where you can improve the customer experience, either by pre-populating the data or by understanding their needs based on your previous interactions. So all of those details will provide a great customer experience, ensuring that they're able to continue, stop at any point of time, save the application and continue at other channels, whether they have initiated the applications from branch, but trying to complete at their home or vice versa. They should be able to do that without having to create a new login ID and password. And then seamless assistance through chat, phone, branch walk-ins. We do understand there might be certain customers who may not really be tech savvy. So it should be, first of all, intuitive for them. But at the same time, if there is any question, you should have the assistance on the online portal as well as within the branch available, ready to be utilized. Now, why this is really important is because based on studies conducted in recent years, digital lenders, the lenders who have just the online portal or digital banks, have more than doubled their market share in the past 4 years. Now, this is the statistics which is only going to grow in the future. So the earlier institutions are able to identify and realize this trend, the better it is for all of these institutions. Now, while customer experience is at the forefront, we do believe that employee experience is equally important, if not more. And the reason for that is because the employees, without having the platform which is intuitive, without having the tools which enhance their productivity, they cannot really serve a great customer experience. Okay, so both of the customer experience and the employee experience strategies have to be planned together and executed together. So we are talking about contextual user experiences, which means that the underwriters should be able to work on the solutions, on the loan origination systems with the context in mind in terms of what is their work that is on priority, how do they process the transactions, where are the exceptions pending, and what is the timeline that is remaining in the expected disbursement or processing time. Okay, and then they should have critical information at their fingertips, easy status tracking, work management, and again, an omni-channel experience. So whether they are working through their tablet, mobile device, and especially with the current pandemic situation, they need to have that seamless experience, even if they are working in the branches or from the comfort of their home. So we talked about customer experience and employee experience. The next transformative experience that the customers can have is using straight through processing strategy. Now, a lot of institutions are working on that. However, it has been really difficult without incorporating or without having seamless integration into third-party systems and without having those credit policies baked into the solution. So we are talking about instant pre-approvals, instant qualification, instant decisioning, and counter offers online. Okay, which means that there should be no reason for the customers, members to wait for a day or so to be able to understand what is the decision for their loan application. Even the process after the approval should be completely online. So we are talking about integration with e-sign applications to ensure that they're able to apply, get approved, and even close the loan online. And the fund disbursement selection should also happen online. And all of this is possible through real-time integrations with third-party systems like the credit bureaus, OFAC, IDV, IDAs of the world. So this should lead to the no-touch, low-touch, and high-touch categorization of the loans, and then how resources have to be allocated to all these segments. The third steps in the transformational journey is the contextual interactions with the customers. So no matter how the customers, members are connecting with the bank or credit unions, we should be able to understand the context of the request, of the connection, of the touch points, and accordingly respond to them. Okay, so we should be able to analyze multiple contact points, whether these is social media, emails, WhatsApp, able to automatically apply AI and machine learning, analyze the sentiments for their messages, for their posts, for the requests, categorize those as complaints, requests, compliments, or other services, and automatically create a case within the solution to be able to track and respond in a timely fashion. Okay, so this is the journey that actually all the customers nowadays are expecting from their institutions. So with all of these steps that we have seen, which which are there, contextual interaction is a critical element. And the reason is that as per one of the studies done by BCG, which is the Boston Consulting Group, for every $100 billion in assets a bank has, it can achieve as much as $300 million in revenue growth, okay, just by personalizing its customer interaction. Now, this is a critical element because if we are able to achieve it, then again, we are on the right track to digital transformation. The final leg and the key piece of the puzzle, which I always highlight, is adaptability. Okay. Now, we do understand that, hey, customer experience is important. Yes, you can always have third parties to enhance your UI, employ the strategies for a great customer experience. Similarly, with the employee experience, you can have greatest of the tools, apply the logic, and provide them the intuitive interfaces. You can have rules which will enable you to have a straight through processing, and then AI, machine learning technologies to have contextual interactions. Now, all of this is something which is very relevant right now. Now, we do not know what kind of changes the future holds for us, what kind of expectations customers may have 10 years down the line, and the scenario could completely change. Okay, so the most critical element that is there now is the adaptability, which is achieved through tools such as Newgen's low-code digital transformation platform. Okay, now what it does is that while we are always on top of the industry trends, best practices, technology, we have the platform which is adaptable and meets 100% of our customers' requirements. Okay, so we do have modules such as Process Designer, which ensures that whatever workflow you want to apply within the process is easily configurable. We have the UI UX designer tools, which allow you to provide great customer experience, great employee experience, and continue to do that in future. We have Rules Engine, which allows you to have your straight through processing for pre-qualification, for pre-approvals, or even cross-selling options. We have business dashboards, which allow you to have a 360-degree view of the lending process, what kind of exceptions are there, what kind of contacts you are getting from the customers, and accordingly respond to those customers in time. And then we have integration adapters to seamlessly connect with all the elements or third-party systems which are there in the lending cycle. Okay. Now, with all of these tools, it's fairly easy for Newgen as well as our institutions, our customers, to be able to manage their processes, their user experience, rules engine reports with minimum of coding requirement or programming efforts. Okay, and all of this is supported by Newgen's enterprise content management platform, which ensures that the process is paperless and completely electronic. Okay. So this was the presentation that we had today for revitalizing your digital lending or retail lending platform, and what are the key steps to that. I do see that we have few questions, so I will take those. Okay, so the very first question is, what is the role of contextual interactions? Okay, um, great question. And typically, we're talking about the interactions that the customers may be having with the bank or financial institutions through multiple channels. Okay, for example, if a customer is posting on your bank's Facebook page or profile that, hey, you know what, I am interested in a credit card, and what are the different steps of getting a credit card, where do I apply, and all of those things. Or the customer is complimenting that I had a great experience connecting with you, and I would surely refer your bank with my other friends. Now with that, one of the way is that, hey, somebody maintaining your Facebook page could review those comments and then accordingly connect with those users or customers. Another aspect of this is applying machine learning, applying contextual analysis, understanding the sentiments. So Newgen solution would analyze the words, and based on the sentiment analysis, based on the words such as happy, sad, frustrated, or eager, I have a question, those kind of words, it automatically analyzes those requests, puts them into buckets, whether these are requests or compliments or complaints, and accordingly sends them to the right department. At the same time, it also responds back to these customers about the registration of the request or complaint, and when they can expect an answer. So from a manual process of reviewing the page and responding, we have moved to a completely automated process of analyzing the requests and accordingly responding to them. Okay, I hope that clarifies. I'll move to the next questions. Okay, so how many US financial institutions you do have on your CLOS, and how many have fully automated straight-through processing? So we have around 20 plus institutions utilizing the lending platform as well as the Newgen's low-code platform. And typically, while we say that straight-through processing is part of the solution, it also really depends upon the type of loans that are being requested. So this is where the institutions try to maximize the straight-through processing by incorporating the rules, incorporating the credit policies. But at the same time, please do keep in mind that if the applicant profile itself does not match the straight through processing, it's really impossible to have a instant approval or instant funding to them. Okay, so most of these institutions have straight through processing rules. If applied to a relevant or ideal candidate, throws immediate results and also allow them to process the loans further. Okay, so yes, most of them have the straight through processing incorporated within the solution. Okay, any other questions? Okay, so thanks a lot for all of your time. I hope this was a value addition to your time, and we can again meet on our next session, wherein I'll talk about the commercial lending trends and some of the improvements that we are looking into the market. Okay, so till then, goodbye and stay safe.